how are you? Vladimir Rybakov here from Traders Academy Club, and thank you very much to ARYA for giving me the opportunity and having me for this live market analysis. It was supposed to be live streaming, but for some reason, due to technology is technology sometimes, and we did not manage to start the live stream properly. So unfortunately, it wasn't possible. So I record this video instead, and the idea was, and still is for the video, of course, is to give brief idea and brief analysis of very interesting opportunities that the market has for us currently. So it's a short video where I would like to share with you some interesting analysis that I have on instruments which I believe could become very interesting soon. So I hope you find it interesting and useful, and that's all. I wish you the best, stay safe, and let's begin. So the first pair I choose to talk about is going to be the pound franc, which is a very interesting, from my point of view, structure building up currently. Watching on a slowdown after these three big waves, we're slowing down with the bullish divergence we can see on the MACD moving average, and a bullish divergence on the other side. So the way I see that, we are heading towards corrective waving. Now for that to happen, I would like to see the daily structuring the same opportunity, and the daily basically gives us here some waving inside, ending up with the bearish divergence and the slowdown, which means we are now facing corrective cycle to the downside, and we have two massive supportive zones, as you can see, marked here by the pink area, right? Two pink areas, as you can see. These are the zones where I believe this pair should stop and start to create some bullish evidences for us before it makes the rally further on. Now, if we drop to the lower time frame, we can see these areas even clearer, right? This is the first one, and a massive one is here. As you can see, it's a very strong zone holding. You see here, holding this area, which also interesting to pay attention to, that if we plot the Fibonacci retracement on this move, we got it here. The second supportive area is in between the 38 to 50% Fibonacci. Now, I believe that this low here should also be interesting as a trigger, because if we are talking here about a corrective phase in ABCD structure, okay, ABCD structure, right, in two waves corrections, then it will be very good to see it cleaning this area, right, and then start to creating and delivering that bullish evidences before the rally takes place. So from my point of view, pound franc is definitely interesting opportunity. Next one is Australian dollar, which I will split for a very long term view, and we'll break it into the shorter one as well. So for the long term, the way I see that, it might be a beginning of something massive. We have here a beautiful cycle going to the downside in classical three-wave trending, cleaning up this area, bouncing on the 0.55 round number, beautiful bullish divergence forming, and a classical engulfing pattern right on the bottom. Now all that is supported by a massive bounce, as you can see here, RSI from 20, MACD for complete new lows compared to all this period before. So the way I see that, we are heading here into some good corrective mode to the upside for the long term. On the shorter term, the view is opposite. As I see that, we are running here into a slowdown motion. You can see how serious the fight was here between the buyers and the sellers in the past. And we can also see the dynamic 200 moving average, which is a beautiful dynamic resistance. Also, we are fighting currently around the psychological number 065, which normally doesn't let it go so easily, and I don't expect this to happen this time as well. What is with this pair then? I believe the slowdown is happening, and on the next several days or weeks we should see that topping. It could be a double top or it could be slightly higher here. And with the slowdown of the MACD, as we can see forming a divergence, we could see and experience some corrective movement to the downside, which afterwards, as I showed before on the weekly, should provide us a serious rally opportunities as a continuation. Now, very interesting thing to pay attention here is the technical analysis, how it fits from higher time frame, which suggests the corrective cycle to the upside, and the lower time frame, which is waving inside this correction. Of course, we need to pay attention to the fundamentals. They drive the longer term reasons, right? All the interest rates and the economical situations, etc., etc. But here are some facts. When all the pandemic crisis started with the coronavirus, it all started with China. China was the first one, well, at least according to what we know in the press, was the first one to recover. This recovery has a very positive impact on the Australian. As you might know, Australian economy and Chinese economy are very, very connected with a lot of import and export relations. So a good recovery there definitely affects the Australian, and I don't see anything too crazy, at least currently, expected with China right now. And from my point of view, this should be an opportunity to enjoy the Australian dollar. And that brings me to another Australian pair, which is the Aussie CAD. And here we have also long-term analysis versus the shorter-term one. So on the long term, as you can see here, we were in a very impulsive with developing waves here, right? And the slowdown currently, of course, we can break it down differently. But the fact is that we are holding this supportive zone. We spiked through, but holding there. There is a massive engulfing at the end. The last wave here is ending with a bullish divergence. And going to the lower time frame, we can see the same kind of extreme conditions, right? On the MACD and the RSI. Very, very low, and the wavings here, as you can see, also slowing down pretty significantly. So the way I see that, we are heading here into the first wave, which later on should deliver correction, and if nothing crazy will happen, later on a continuation. So how would I approach to that? On the daily chart, we are currently developing and slowing down here in the 3 waves. Each wave is getting, as you can see, different angle, slowing down. Massive resistance on here, and even slightly higher. All that puts a massive pressure on this pair, on the area somewhere surrounding the 092, 093. As we can see, the MACD moving averages develop the divergence, while the histogram already suggests one. So it's really interesting to see how it's going to develop here, but I expect a slowdown on the next several days and weeks, corrections, which later on are likely to deliver the continuation upside. Now, even on the lower time frame, we can see this slowdown. So basically what we would want to see on the market is to start and get some bearish evidences, right? Like fake breakout, for example, right? And then creation of lower lows. Or basically developing bearish trend definition in the first wave, and that's make it lower highs, lower lows. That's how we define a bearish trend. So the way I see that, it's a really, really interesting zone we are heading to. You can see also massive resistances on the go here. So from my point of view, something very interesting is coming and likely to happen very, very, very soon. And the last one which I want to include is the oil. As we all know, now the economies start to release the lockdowns, which by itself means stronger demand to oil. Transportation is expected to start and get better and better and better, right? People start to drive, businesses open. Soon enough, probably the skies will be opened again. The demand should be there. The way I see that, oil which ended up in this cycling condition, ending with the bullish divergence, should be heading towards a corrective cycle. So from my point of view, drops or ranges should deliver this trend continuation upside. So we might be hitting this, then little corrections, for example, right? And then with bullish evidences, we might enjoy further on continuation. There is a massive area here which we need to pay attention to, likely above 30, likely to be retested, and there is other one here which also is slightly above 35, which I believe for the longer run would be tested as well. So these are the instruments that I find very interesting to follow. Of course, you know, if any one of you is master of scalping, this could be used in scalping mode as well. But the way I see that is a longer term perspective, and I believe the opportunities there should be such opportunities that could deliver real waves and real trends, and therefore bigger moves and bigger or maybe longer opportunities to enjoy some ride. Will that happen fast, or will it take some time to develop? Well, my answer is, since we're talking here about analysis of the longer terms, the expectations should be accordingly. Okay, fast reactions normally do not happen in such time frame. It takes time. We cannot expect things to happen within an hour, a day, or even two. Normally they take longer. So that's the most interesting technical instruments I found for this short meeting we have here. As I said at the beginning, I wish we could have this chance to make it live, but sometimes technical the technology part has technical issues. That's fine as long as we have alternatives. So I'm very happy for this opportunity to record this video to ARYA community. This is a fantastic community, and I hope you see the value of it and you enjoy it. And I hope to see you guys live later or sooner. Once again, thank you very much for your time watching this video. I wish you the best, and ARYA, best to you and all the team as always. Thank you. See you soon.